So as a team, we've all done all of these different companies, and we started Cosimo as a holding company to really help early stage entrepreneurs. Look, one of the appeals of tokenizing venture capital is that venture cap and we'll take a step back. So we're always raising money and we're always doing deals.
What is holding this industry back in your perspective from some of this, these adoption curves that everyone's craving? Hello, security token market. Welcome back to another insider interview. We're joined here with two amazing individuals from Cosimo Ventures. We're here with Rob Frasca, who's the managing director and co-founder, as well as Jack Ward, a principal from Cosimo. Guys, thanks so much for joining us today.
Thanks for having us. We're thrilled.
Yeah, thanks, Kyle.
So I think we have a whole lot to cover here with regards to understanding a lot about Cosimo, what you guys are looking at, as well as maybe we can get into just perspectives on the industry, because I know we've been talking for a couple of minutes and we're all kind of aligned on some of the things going on in the market. But I think first we got to give the full landscape of what's going on here. So can you talk about Cosimo, Rob, and how you built this business and what's the story and timeline behind the business?
Absolutely. So Cosimo Ventures has been around since 2014, which is hard to believe. We've been pretty heavy in blockchain. I would say since 2016. We're four partners and then a bunch of venture partners and principals like Jack, who's on the call. And we're all serial entrepreneurs. So I'm actually an early.com guy, started the very first financial service on the internet, was acquired by Intuit, then an AI company acquired by Lycos, then another company. So as a team, we've all done all of these different companies. And we started Cosimo as a holding company to really help early stage entrepreneurs. We've got an office in Dublin, one in Boston, and it was really about getting involved early, mentoring, helping, investing with entrepreneurs. And then all of a sudden along comes the blockchain. And, kind of being in this market now for over 30 years, when we saw blockchain, we're like, oh my God, this is bigger than the internet itself. I go out and say all the time, right? I think it's the largest value creation event in our lifetime. So we started investing early in blockchain projects and companies, but we did them primarily through SPVs, special purpose vehicles. We would basically, create an SPV for a project, pass the hat with all our investing friends, and then we do a deal. We'd take a little carry interest, a little fee off the top and do a deal. And then I'd say around 2 years ago, we said, holy cow, tokenization is really a critical component in the market. Why not create a tokenized venture fund? And that's what we did. We created Cosimo X. We believe we're the first, I would say, evergreen. We're not the first tokenized fund. Spice is probably the first, and Blockchain Capital, those two guys. But we created the first evergreen one. And the whole concept here was to really create a venture fund that has the promise of liquidity on the back end, and the payout to the investors is all handled through the blockchain, via smart contract. And so the fund's sitting right around 30 million now. We did, 17 deals last year. I think there's maybe 35 deals total in the fund. The holding company, Cosimo Ventures, a lot of people don't understand this, it is a holding company. So like we own a subsidiary, we have a partially owned custodian out of Europe. We own partially a blockchain dev company that's doing, a lot of really cool projects. And then we also just recently launched a not tokenized, a risk managed digital yield fund, all proof of stake digital yield fund. So that's kind of it. We're all in on blockchain, and we've definitely been fighting the tokenization battle now for quite a while.
It's a war. It's totally it's a battle. That's exciting. I think that the Yeah, there's certainly a lot to unpack there, but the obvious first step to go into is to talk more about Cosimo X. And so let's first start with the fund structure itself, because I think what we preach with security tokens all the time is that these are real securities, right? So it's
That's right.
securities first, and then of course you're managing that stuff on chain, and it certainly benefits to a significant degree the compliance, the settlement, the identification, managing that whole process, paying dividends out on chain is something that we talked to Tal about from Spice VC recently. He mentioned that was a big advantage of using the tokenization concept, was actually distributing those payouts to wallets was a tremendous benefit, as opposed to having to manage that manually. So but before we get into some of that stuff, let's talk about Cosimo X. So it's an evergreen structure, open-ended style of fund. So how does that affect the way that you're investing in deals? Because of the fact that, are you kind of always raising, or are you opportunistically raising? What's that mean for how you're deploying? Kind of where's your thesis? Some of those types of things. I'd be interested to hear a little bit more.
Yeah, sure. So first thing, I do have to shout out, we do use Securitize. We're big fans of Securitize. I think we might have even been, I don't know, maybe their first paying customer. I mean, obviously they did Spice, but we've been with them since the very beginning. So we're big fans of Securitize and what they're, and what they're up to and what they're doing. And I think the news with them working with KKR and Avalanche is really fabulous.
Massive.
Great for the industry.
Great for the industry, for sure.
Yeah. Yeah. So let's talk a little bit about Cosmo X. So look, one of the appeals of tokenizing venture capital is that venture cap, and we'll take a step back. So venture capital in blockchain, there's a very interesting dynamic that's not obvious unless you're in it. And let me tell you what I mean here. The traditional venture capital model is a 10-year, locked up fund, J curve, investment in the first 4 years, payout in the last 6 years. It's a fixed pool of money. And generally, most venture funds even have, extensions on the back end as they wind out deals that they put together in a portfolio. And when you think about the standard early stage investment, the thing that the venture fund is actually investing in, it's a long haul, right? To go from seed to unicorn, what's the average time? I don't know, quote me, 12, 13, 14, 15 years. I think it's 12 years. And the average exit across a universe, there's a study that was put out, I don't know, several years ago, but the average exit across a universe of 15,000 venture funds history is 4.6 years. And that includes, going out of business. All right. That's
yeah, I guess that's
right. So if you take that out, it gets skewed.
I always heard like 7 to 10 was like
exactly
the rule
if you
of
get
thumb.
rid of if you get rid of the donuts, I think it's like 6.9 or 7,
Sure,
right?
Sure.
So when you think about it, the thing you're investing in is got a 10-year horizon. So why not have a fund that has a 10-year horizon, and all in with a couple extensions, 12 years, 14 years. It makes sense, right?
Sure.
So you don't, it's okay, right? Aside from the fact that it's hard for investors to be locked up for 10 years. The blockchain market's different than that. The blockchain market, because a lot of these projects are floating, they're not floating equity, they're floating tokens. What we're seeing is that a lot of these projects get some sort of liquidity. You're not get crazy liquidity, but you're going to get some sort of liquidity, and you're going to do it in 2 to 3 years. And so the idea of venture investing in the blockchain world kind of compresses a lot of the cycle. The other thing is that as a venture capitalist, you may get like what we do with Cosimo X is we're buying generally early pre-liquid, tokens, or we're buying preferred equity. So there's not a lot of liquidity, but we're getting liquidity pretty fast. But even though we have liquidity, we may not want to sell, right? Because it's early. And so as venture capitalists, we spend a lot of time thinking about, okay, hey, I just did this deal. They went liquid. We're up 5x. Do we sell? Do we hold? And are we managing that the liquidity? So long-winded answer to say, that tokenization, I believe, really plays well to early stage project and company investing in the blockchain arena because of the timing, because of the timing uh,
Right.
issues and differences in
So
this.
how does the fact that how does your tokenization work? Is it the LP interest itself that's tokenized? Is that an
Yeah.
option
So
that
you asked,
LPs
are we
get?
always? Yeah. So you asked, are we always raising money, right? And this gets again, it gets back to the old versus the new.
Sure.
So, as an entrepreneur, I would never raise money back in the 90s and 2000 from a venture fund that didn't have dry powder, right? Because what I want to
Well, you
do is
couldn't, right?
I'm going to eventually I'm going to run out of money. We all do, and I'm going to need more money. And the last thing in the world I want to do is go find a new investor. That's not the case here. The case here is what we're seeing is that entrepreneurs are really savvy. Number one, they're getting a large cap table versus one big guy on the cap table. They've got a big cap table or a big token table. And because they're going liquid so fast, the benefit of having dry powder doesn't really it's not there. And so that's another reason why we said, hell, let's tokenize. So what we're constantly doing is we're always raising money, and we're always raising money, and we're always doing deals. We'll set money aside. We'll set money back for some dry powder because you do need it, but it's not as important as kind of a fixed size fund where, okay, I got $40 million, I'm going to do $41 million deals, or I got $40 million, I'm going to do $21 million deals with $1 million follow on. That's not how we operate. We're always raising money. It is evergreen, and we're always doing deals. With that said, when a deal does get liquid, we take our carried interest, and then what we do is we buy back at the investor's option. We take 50% of the proceeds of the exit, and we buy back tokens.
Right. Okay.
And we burn them. So that's kind of your distribution. The other 50% we put back in the fund for reinvestment.
Sure.
Okay, so that allows the fund to continue to invest. Now, the investor always has the option to sell their tokens, right? Provided there's a good liquid market there. So, that's really how we decided
Sure.
to
Do
structure.
all of your LPs have tokens, or do some of them prefer to have the paper splits?
I would tell you that they probably all have paper.
Right.
Yeah. We have Rochester Institute of Technology in, and as they're as an investors, a bunch of other institutional guys, and it's kind of funny.
They're not
say,
too
okay.
excited about it.
No, they're like, wait a minute, we wouldn't know what to do with the token if we
So how
had
does
to.
that work with regards to if your only way of recouping value as an LP is in the token burn? If they don't have tokens, is there a buyback?
Well, they
you
have
offer to them,
tokens. They have
or-
tokens. We hold the tokens in treasury through their standard agreement.
Okay. Okay.
Yeah.
And so at some point they could choose to liquidate that if
Absolutely.
they
Yeah, they
chose.
have the full benefit of the token without custodying them.
Right. Okay. But that
Yeah.
is the way that they would realize the returns on their fund is through that.
Absolutely. Absolutely.
Right.
Absolutely.
Very, very cool. And so with regards to the deals that you're doing, you mentioned that you do token deals as well as equity. What is the kind of the preferred type of deal flow that you guys see? Is it, especially right now, perhaps you're tend to be considering more of the traditional style of investment vehicles because the token markets aren't quite as hot, or are you pretty agnostic with regards to the instrument that is being sold?
It really plays to what the project or company is that we're looking at. If we're investing in a protocol and they're building out a network, we want the token. If we're investing in an application or a company like we did Uphold, for instance, pretty early, then we're going to take preferred equity. Whereas something like Hedera, which we did, or Casper, we're gonna take the token. And my general belief in this is that I don't think there's a better time to be in the market. So, and I'm speaking from history here, right? When there's blood in the water, that's the best time to go fishing, as I always said. And I think we got out we got out over our skis here. We've pulled back. The promise of this market is not going away. It's only getting bigger, and it is massive. It is disruptive. It is early. So I believe now's the time to really be, to be out there.
So on that thesis, I think the question is, we've seen how there are arguments around how, Bitcoin or certainly other cryptos may be non-correlated assets to public markets.
Yeah.
But we haven't seen that in practice yet, right? Most of the time when it's a bull market in stocks or tech, it's a bull market in crypto, and vice versa, as we're seeing in the current market climate here at the end of 2022. Do you see that happening in the foreseeable future, or at what point are you going to start to look for a divergence with regards to these markets? Because presumably, if I think we all agree that this market is still set to grow tremendously, does that mean that we're going to have to be beholden to the public markets with regards to when they get their act together, or do you see the divergence happening differently with regards to these Web3 assets?
Yeah, there's a lot in that question. I feel like as long as these assets are pegged or exited through a vehicle of the dollar, you're going to have some form of markets correlation. I feel like once things like Ethereum or Bitcoin or these other currencies can be used for value without ever converting to a dollar, then they're going to they're going to start to uncorrelate, if you will. That's generally what I feel. I think that there's still fiat on ramp, fiat off ramp. I think people are still looking at these currencies as a way of extracting value out of a system. With the exception of Ethereum, right? The nice thing, I just love Ethereum. I love the fact that the merge happened. I think it's a beautiful use case, and I think what it does is it points to really long term how these networks can be deflationary.
Right.
And what I like about Ethereum is you got to use Ethereum, okay, for utility to clear the transactions, and to me, that's what we're talking about. So it's not a speculative asset. It is, but the real cornerstone value of Ethereum is to clear a trade, to be a decentralized settlement layer, and to use Ethereum in itself to pay for those transactions. So I'm getting real value for that.
Right.
And to me, that's exciting, right? So if I'm using something to create value, and I don't ever have, if you think about it, if I'm in the business of wanting to settle trades, then I don't ever really care whether or not ETH is 1,600 or 5,000 or whatever, because I have a pool of ETH and I'm using it to exchange value, right? And I think that when that happens, you're going to start seeing more decoupling.
I think that makes total sense. Jack, did you have any thoughts on that front? What are you looking at in terms of the market? What's getting you excited in the current climate with blood in the water, as we described?
Yeah, I mean, the most exciting thing is probably just the energy that you see across the space. Everyone's still just so focused on building, creating real value, especially in the decentralized finance space. We're going a lot more towards like real yield, real world assets. And I think that'll be a great trend going forward, especially given the macro conditions. Like the first 10 years in crypto, it was pretty uncorrelated to normal markets. And then, once you get to a certain size, you can't ignore the influence of the almighty dollar. So we're definitely correlated with the dollar for now, but Ethereum has its own inflation, its own monetary policy. And since the merge, we've seen it, burning Ethereum like crazy. It's almost deflationary since then. And that's just from people using it. That's just from people extracting value from the protocol. So I think we do have a chance to decouple it as more of these traditional companies start to transition over to DeFi. Like just this morning, we saw, JP Morgan using DeFi protocols. That there's a lot of value there that hasn't translated yet in the crypto space. So, I think as people continue to build and as fiat currency continues to get devalued, it's just fundamentally Ethereum will, and other cryptos will then also just strengthen relative to that. But
Interesting.
just really the energy has been awesome.
How do you think that translates to the security token space, which is naturally pretty ingrained to the US capital markets?
Yeah.
Do you have any thoughts around how that will, like, where do security
Yeah.
tokens fit in? Are they more like stocks? Are they more like crypto?
Yeah. So yeah, let me, I'm a big kind of macro, I'm a Carnegie Mellon, MBA kind of geekery, right? So I'm all about product, what is it called? Product diffusion theory, right? How products enter the market and how markets grow, and really the study of that. And one of the things that you see in all markets is, you got visionaries who come in, they invent the tech. Then the early adopters come in, they go, holy cow, this tech is really cool. And they start using the tech, but they're not really what I would say market experts in the tech, in the use of that. They're market experts in the tech, but they're not market experts in the markets that are using the tech. Okay.
Sure.
So if you think about it, and then what happens is you got really true market experts, okay, who kind of jump in and say, wow, I can really use this to solve my everyday problem. Okay. That's exactly what's going on now, okay, with blockchain, right? So you got the early visionaries, they come out with Bitcoin, they go, holy cow, this stuff can be great. You have the ICO craze, then boom, that pops because it gets over exuberant. And then there's, all kinds of regulatory holy crap. And then you got kind of early adopters coming in and going, wow, this stuff really makes sense and we can create a lot of value. And then you kind of cross this chasm where Wall Street now, right? In the beginning, Wall Street says that stuff's crap. That's rat poisoning. That's gonna kill everybody. That's the end of civilization, right? Because they gotta poo-poo it until they can learn about it.
Right.
And then they finally learn about it and they go, holy cow, you can really use this to make a better system. And so you jump the chasm, and then you kind of got that early majority jumping in. That's what's going on right now. When you go to these conferences where Jack talks about excitement, you go to the conferences, you see what's happening in the market. In the early days, there was nobody from Wall Street at these companies. And the Wall Street firms, they didn't have anybody working on it. Now today, they don't have just one guy, they got entire departments. And they're building this stuff under the covers and they're not telling anybody about it, right? And they're solving real world everyday problems that, quite frankly, they're experts in.
Sure.
Right.
Sure.
And that's what's happening. And the other thing that's happening is a lot of the people in Wall Street are saying, wait a minute, if I go work over there, okay, because they need me, I'm an expert. And so they're jumping ship and working for the projects. Okay.
Right.
So now you got the projects that have real Wall Street, and I'm using Wall Street as an example.
Sure.
So now the projects are all hiring Wall Street guys, and the Wall Street guys all have their teams, and lo and behold, it's off to the races. So you said security tokens, and how does this all fit in? Well, I think that security tokens is that kind of TradeFi utilization of blockchain.
Sure.
So it doesn't surprise me that it's late to the market, because the only way that the security token market's really going to take off is if real world Wall Street TradeFi KKR guys, JP Morgan guys, okay, use blockchain, okay, to do what? To settle securities, to create a decentralized settlement layer for real world securities. And so
makes total sense.
Right. So for me, was Cosmo X early in the security token market? Hell yeah. But the reason we were is because we want to learn. We want to be in this market. We want to invest in it. What better way to invest in it and learn it than do it? Whereas I think now is the time, and you're just going to see more and more and more of these activities happening.
That's a really interesting answer.
So it's not, it's never a question, at least in my mind. I could be wrong, right? I don't have a crystal ball, but for me, it's never been a question of if. It's always been a question of when.
So for a security token issuer, somebody that's considering doing a capital financing raise or something, leveraging tokenization, what advice would you have for them to appease investors that maybe are a little bit more hesitant to participate in this ecosystem? What was your experience with that? How have you navigated that? Are you guys interested, or how do you feel about investing in tokenized deals versus traditional deals, specifically on the securities front?
Um, I personally feel that the way that I treat it now is I used to lead with tokenization. Now I don't even talk about it. To me, it's just like, what's the color of the paper?
Right. It's like you're using Carta or something else on the back end. Nobody needs to really necessarily know.
Exactly. Oh, by the way, it's tokenized. Oh, you don't want
Right.
to tokenize it? Great. We'll hold it in the treasury.
Right.
But here's
Right.
the added benefit of it. And I think, early on, you're all excited about it, right? You're teaching lawyers what this means. I mean, the lawyers that we use, they should have paid us.
Sure.
So that's how I feel about it right now.
Do you think it will always be that way, or do you think that people are always going to be investing in these things as securities and then not care how it's managed on the back end, except for the financial services platforms that are actually capitalizing on the benefits? Or do you think at some point it will become something that the investor will look to demand for any specific reason?
I think that real long term, everything's going to be tokenized, just because in a wallet environment, it's
The
seamless,
interoperability, right? Yeah, frictionless.
and if you really believe in Web3, which what we do is you are your key, you are your keys, right? And so, yeah, I loved it. I just registered for Farcaster. I don't know if you've seen that. So, decentralized Twitter. It's pretty cool. Farcaster.xyz. Anyway, it's invite only, but you go there and first thing you do, you connect your wallet, create your name, connect your wallet, right? So for me, I think all of tokenization, everything's going to be tokenized, and it's all going to be all revolve around your keys and your wallet. And I think there is serious long-term benefit to do that. However, short term, I feel like the people that really benefit from tokenization are people that have serious brand. So like for KKR, I think it's a huge win for them, right? Because what it's doing is they got the brand, people and people want the product, and people can't get the product. Sure. So why not use tokenization to allow a whole new class of investors to come in and get access to a product they normally couldn't have, and in then doing that, creating liquidity around that. And I think those kinds of deals, right, for me, are ultimately how this market gets broad adoption. And then guys like Cosimo X, who nobody knows about, it's a small little venture fund, right? But ultimately, if we're there, that rising tide, kind of rises all boats. I think that's what we're talking. I think it has definite legs in things like fractional ownership too, with respect to real estate.
Totally.
Right. That makes total sense. And Jack, what else? What is holding this industry back in your perspective from some of these adoption curves that everyone's craving?
Yeah, I mean, I really think it really just speaks to the maturity of the market. Like a lot of the added benefits and promises of tokenization haven't really come into fruition yet. Just because that there's extra liquidity, and that's true, but that the market participation is not necessarily there yet, and that's just because I think we're so early. So I mean, I think I share the same opinion. Long term, I think everything will be tokenized. Near term, it might have to be sort of like that Trojan horse type of play, Reddit's doing that right now, where they've got 3 million people with wallets. Like a lot of them probably don't even know. 10 million sales NFTs. It's like that's how they got digital identity. Like that's gonna click for people, and then they're gonna be like, okay, yeah, I want a wallet. I want to do more of this. And I kind of see like security tokens going in that direction as well, where like the benefits like will start to happen. Like people will see the added liquidity, people will see like the broader market access, like tokenizing real estate, like that's behind because of regulation right now. That's not because there's no value. It's just like there's no real way to do it, even though the technology's there. Like the applications have to catch up to the technology in a way. And I think once that happens and it kind of clicks and it's easier for people, like it'll totally catch on. It'll be in high demand. I'm super excited for it.
Love it. Love both of your perspectives. Appreciate you guys sitting down with me today. The
Absolutely.
final question that I have, Rob and Jack, if you have anything else to add, please do. With regards to people that are watching this, most likely our audience that's watching this are pretty educated in this industry. They likely are either considering their own deal themselves that they're looking to bring to the tokenized market, specifically with a security, or they're looking to potentially invest and could learn a lot from your perspective. What are you looking for in respect to a deal when somebody pitches you? What are some of the green flags, if you will, that you're looking for an issuer? Presumably you're willing to make big bets on early stage companies, so maybe it's not as much about maybe the revenue KPI, for example, but what things are you looking for that really speak to you with regards to knowing whether or not you want to make an investment in a deal?
Yeah, ultimately, we as investors, venture capitalists, we're looking at the traditional venture capital profile, right? We're not going to invest in two guys in a garage. What we're going to invest in is generally something that's gotten through MVP, has really shown that they've got product market fit. So we look at that. We look at the entrepreneurs themselves. Have they done it before? What kind of experience do they have? And quite frankly, do they get along with us and do we get along with them? A lot of times if there isn't chemistry there, you just don't want to do the deal. The other thing we spend a lot of time with is just syndication, right? Who are the other investors? Who else is around the table? How many are there? We'll look at that. When it comes to protocols and it comes to projects and those kinds of things, one of the fundamental things that you just got to understand is we're building networks. We're moving away from this kind of, Niall Ferguson, right? The tower in the square, right? The old days of centralization where you're investing in the tower, the company, versus you're investing in a network. And so we spend a lot of time looking at what are the network dynamics, how fast is it growing, how many super nodes, how fast is that network promulgating, and that will ultimately give you a good indicator of the viability of what we're seeing, and we also have kind of a backdrop of real world problems that we're looking for that we think should be solved. And we're always looking at, okay, who's doing it? Like a Farcaster, right? Geez, man, why can't we put the namespace of a social network and make it decentralized? And how can we take all this media and instead of putting on a central server, put it out into the cloud and make it decentralized? And how do we settle royalties from media across a decentralized network, across various disparate affiliates? All that stuff should be able to be solved with a blockchain and smart contracts. And so those are kinds of things that we spend a lot of time kind of.
Super, super cool. Jack, do you have anything else to add there? That you mentioned the DeFi ecosystem, some of the other things. What else is really getting you excited in this market?
Yeah, I mean, I think the recent trend has just been seeing a lot of practical application. Like a lot of the early DeFi tools were, very complicated. So like, someone like in finance would want to use it, but not a lot of tools for like the average consumer or the average person. And that's same for like the apps. We're developing all this super crypto, like complicated protocols and apps, and now we're starting to see like very practical, like this will benefit like your everyday life type of projects coming out. I think that will really kick off the mass adoption kind of the next wave. And then also like the kind of the opportunity and threat or challenge in the space is like, not only do you have to find a good idea that, has product market fit, has the ability to grow, it also has to have really sound tokenomics. And that's kind of something I've seen people ignore in a way in this first few big waves of crypto is like, there's a lot of great ideas, but you look at them and their token schedule is a disaster, and you're just going to get inflated out of your position. And but there's ways to do it right, and then there's ways to invent brand new ways of delivering value. And I think that's the coolest part of tokenomics. There should be classes on it. I think it's going to be a huge case study, like just over the next few years, is all the opportunities to bring like a new token model to practical businesses.
That gets me fired up. You guys are definitely on the cutting edge, seeing most of the hottest deals in the market and getting very involved in the space. Rob, Jack, if anybody wants to get involved with you guys, find ways to connect, whether it's to pitch you deal flow or to find ways to work together in other ways, what's the best way for them to do that? How can they get in touch?
Yeah, LinkedIn. We're big on LinkedIn. You can go to cosmoventures.com or CosmoX or CosmoY.com, the two funds. Or I'm on Twitter at Rob Frasca. Jack, what are you on Twitter?
Jack Ward CV.
There you
Cosmo
go.
Ventures.
Yeah. Yeah. So, look, we love to hear from anybody. So you got ideas, you want to talk, whatever, reach out.
Great.
And definitely check out our new proof of stake digital yield fund. It's pretty cool.
Ah, cool. So we didn't even get into that. Maybe that's
Cosmo Y.
for next time. Cosmo Y, we'll dive into that. It's certainly been a ton of fun, gentlemen. Thank you so much for talking with me, and we're definitely going to do another one soon.
Yeah.
Definitely.
Thanks, Kyle. Really
Yeah,
appreciate it.
thanks, Kyle.
Of course.